Still on Grace, welcome to Grace View Forex. Yeah, we teach you, give you the best of Forex strategies and strategies that will help you trade profitably. I'll help you, grow your accounts on a daily basis conveniently. You're gonna grow your account conveniently. People have good strategies, but they don't know how to follow rules, and they don't know what to do when trading. Well, I'm going to teach you. I'm just going to teach you. I'm going to give you rules. I'm going to give you entry and exit position of this strategy, and I tell you, you're not going to lose your money every day if you know what you're doing. If you follow the rules, every day you'll be making profit. You'll be going to bed happy, sleeping happy. Yeah, that's it. So this is boom and crash. Like for the newbies who doesn't know boom and crash, you can only find this trading index on binary.com or Derive Limited. That you find boom and it's a synthetic index. So this strategy, let's dive into it. Before that, please subscribe to our channel. This is our first video we are doing with this channel. Please subscribe. So I encourage you. I know after you watching this video, you're gonna want to subscribe, and you're gonna turn on the notification bell so that you get more of our strategies and of our tutorials on forex trading, crypto trading, stocks, index. How you can grow your account, make yourself profitable, and then add some money into your wallet, to your bank. So subscribe to Grace B Forex, and press the like button, and you can also make comments. If you don't understand what I'm going to teach, you can also make comments, and I would definitely reply you so that I can make this clearer for you, because we're here to make people happy and not just creating videos upon videos upon videos. We are here to ensure that people understand what we are doing and they are really making profit out of this. So as you can see on my screen, I have three moving averages here. Three moving averages. We have the yellow moving average, the white, and the brown. Let me say brown. Yeah, I'm sorry if I'm not getting the color right, but I just choose to call it brown or gold. I don't know. We have the yellow, the white, and the brown. Let's say okay. Now this strategy is a spike catching strategy. It's not a strengthful strategy. It's spike catching strategy. You can catch a lot of spike trading this strategy. Okay, now for example, we have crash 500, crash 1000, boom 500, and boom 1000. So with this strategy, you can get at least on crash 500 alone, you can get close to 10 spikes a day. Now combining the three others pair, that is, you can catch close to 40 spikes a day, which is gonna give you a lot of money with the minimum risk management. You understand? So let's dive in. Now this strategy, I call it the three crossover strategy. The three crossover strategy. Now this strategy is very, very simple. Like I said before, very simple and very easy. You just have to follow the rules. Now now for example, now we are crash. When it spikes down, and for boom, when it spikes up, it goes up. Now since we are on crash 500, I will be showing you how to place an entry, how to look for trades when trading this strategy, how to trade this strategy. Now, first of all, moving average, one of the best way of using the moving average is the crossover strategy. Now that's what I'm going to be teaching you today, the crossover strategy. Now you see, now this strategy, when either the yellow or the white moving average crosses over, or three of them crosses over. When it crosses over here, for example, now it crosses over here. Let's see this. I don't know. Let me see if I can, get more of this. When it crosses over here, you can see the crossover there. What we do after the crossover? What will you do? you wait for the first retracement. There's always a retracement. The market doesn't just go down without retracement, or just go up without retracement. There will definitely be a retracement in the market. So after the crossover, the first crossover, then we look for the first retracement. We look for the first retracement. Now, what's the first retracement? This is first retracement. This is the first retracement after the crossover. Hope you understand it. Hope you're getting this. This is the first retracement. Now, for this strategy, after the first retracement, we are definitely going to be looking for an entry at the second retracement. Close when this candle, these green candles are going close to this yellow moving average, we look for an entry, a sell entry. That's it. As you can see, we have the crossover here. Then we have the first retracement. Now, this second move up to the moving average, we are going to take a entry. Now, look at, for example, you can see now I took my entry here after immediately the candlestick got to the yellow. I took my entry and boom, it dropped down. That's it. That's how we are doing it. You can see this is where I closed my trade. I didn't watch this trade. When I took this trade, I left it and I went to do something else, and I caught the trade here. I was so busy. I had to teach people some stuff offline, so I had to go. So the strategy is after the first crossover, we wait for retracement. Always wait for a retracement, even if it's 2 candle retracement, 1 candle retracement. All I want is after a crossover, look for the first retracement. I don't care if it's 10 candles, it's 2 candles, it's 5 candles, in as much as it's retraced back to the moving average. You understand? In as much as it trace back to the moving average, then it gives me a spike. I need to see a spike. Now it gives me this spike. When it gives me this spike, I wait for it to go back to the moving average. Then when it go back to moving average, I place it by entry, and you can see it spikes here. You can see this one also here. It spiked. I will place a trade. I would have placed a trade here and spiked. Place a trade here, is spiked. Place a trade here, is spiked. Place a trade here, is spiked. Place a trade here, and it's spike. You can see how many spikes you would have caught. Look at this also. Place a trade here and it's spiked down. So this is the strategy. And now, now I've showed you the entry of the strategy. You can see it. You can see. Look at how many spikes you would have caught in this trend. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 spikes just for how many minutes? Come on. This strategy, if you don't make money in this strategy, I don't know how you're going to make money in forex trading. Now, that's it. I can give you more examples. Let's go to another example. This one is always be a loss. Now, look at this. For strategy, there's nothing like holy grail in a strategy in forex trading. There's nothing like holy grail. But this strategy, I will teach you how to minimize. You wouldn't even know you're making losses. Now, look at this. First, we had the sorry, I don't know how to use this. I'm just learning for the first. Come on, man. Now we have this. We have the first spike down. Now we were expecting to make our entry. Our entry here. So if we are entered here, now look at this strategy now. For me, I would have exited the trade as soon as this candle here shows. That is when the trend go above the brown moving average, I close my trade. But it happened, but I would have closed my trade. That is my stop loss. That is my stop. The brown moving average is my stop loss. But in some cases, I don't wait for the price to get to the brown moving average, because one of the exits signs rules for this strategy is that when the moving averages are fanning out, for like this is a good example now. When the moving average are fanning out, you know that trend is about to retrace or change change the trend. Sorry for my lagging. Change the trend. So when I mean fanning out, that means it's widening. So for example, now you see this one now. There's a cross here. That's where the moving average cross. Now we have our first retracement to the moving average. Then our second entry. You can see it didn't go out of the moving average, so we had this down. As you can see, the other one we catch this one too. So that's it. Now look at it. You can actually see now. Look at this place, this moving average. You can see how close they are. But look at here, how wide they are getting. How wide. So you know that it's risky to enter this trade because it's already wide. The loss will be wide. If it's here now, the candles before it gets to the brown moving average should not be much. But look at it now. Before it to get, maybe you take an entry here. Before it to get to this place, there's a lot of candles. So you know that it's a very, very, very big risk trade. So you don't take it. Don't take it. Please don't take it. Now let's look for an example. Now this for crash is when the trend is showing a downtrend. The moving average is showing a downtrend. That's when you do what you enter. Like for example, now look at this. It crossed here. We had our first retracement here, and look at this. Would have lost this one. Would have lost this because it went out, but it came down here. But it spiked. Since it spiked down, you look for another retracement. You see this one. We'll catch this one. We'll catch this one. And so that's it. We'll catch this too. That's how I trade this strategy. You're always going to win. You're always going to make profit at the end of the day. Don't be scared to just manage your risk. Risk management is everything in forex trading. I repeat, risk management is everything in forex trading. So this is what's happening here now. After the crossover, we have first retracement. Look at it, first retracement. Then we put our entry here. When it gets to the yellow one, we put our entry, and boom, it came down. Second entry, third entry, fourth entry, fifth entry. Look at it, it's widening. Since it's widening, there's so much here. I won't take this trade here because it's the moving average are separating far from each other. I won't take this trade like I told you. Please, that's the exit rule. Now let's look for another example. Now we can see this. There's a law. It happens all the time. Look at the crossover, and we also have the first. After the crossover, during the crossover, we have the first push. Now look at the second push here. We went down. Would have lost this one. That's it. Would have lost this one too, but still yet, if we cut this, can still gain our money at the end of the day. Look at this nice one here, crossover. This first crossover even happened. There are two crossover here, first one and the second one. As you can see, after the first one, look at what happened. Look at this one, look at this one, and look at this. You see, I wouldn't have taken this trade because of the fanning out. It's getting wider here. But look at how many trades we catch. We catch this, we catch this, and we catch this. That's a lot of profits for the day. So this is how this strategy works. It's a very simple strategy, and it's very profitable. So just follow the rules. Follow the rules and you will get it. Now, what are the rules again? After the crossover, you wait for the first retracement. Now if there's a retracement immediately the crossover happens, I will count that also as the first retracement. I can count this as the first retracement. Then I'll say this is my first entry, second entry, third entry, fourth entry, fifth entry, sixth entry, seventh entry, eighth entries. You can see that. So this is how I trade this cash spiking strategy. As you can see, I can show you all of them. I can continue to show you them. Look at it. It happened there. Retracement. Then we have our spike here. This is large. This is large. So I won't take this trade, but I'll catch this one. Still good enough. Now look at this too. After the cross. There's a cross here. We have the retracement here. Retracement 1 and what? Second retracement. So this is just it. This is just it. It's as simple as that. As you can see this now. After the crossover, we have missed this one, but at the end of the day, we still make profit. It struck down. First retracement. This retracement will take it down to this place, catch this spike too. So that's it. You have to understand the strategy, learn the strategy, backtest, do your own research on it, and you'll see everything, making sense before your eyes. Okay, now let me show you the moving average settings. We have the 10 moving average exponential method, exponential apply to close. The style I use yellow. You can use any color. Then the second one, we have the moving average period 20 exponential apply to close. I use the teal color or the white color. I don't know much about color. Sorry. Then the third one, period 50 exponential close apply to close method exponential. Style I use brown. You click done. That's how we get in it. Now look at this one here. We have the crossover and also the retracement. Crossover and retracement coming at the same time. Then we have our entry. So guys, this strategy is so simple, and I don't think you should have any problem. Now let's look at for the boom. Let's go to boom. We won't be looking at for spike. Now let's look at this. Wow. Look at this first crossover. Sorry about that. First crossover with the spike. Now what we're looking for the next move down to the yellow moving average. We take the first trade, take the second trade, take the third trade. But from here we'll be this place we won't let, since it's getting wider here, we won't break so much here. We take this second trade, and we move. Now look at this third trade, as in the first, second, third, fourth, which didn't go well that much. We exit it. This is where we take this loss, minimize the loss. Now look at this again. It's retraced. It acted as a support. Acted at a support level. First retracement and the crossover. We have 1, 2, 3, 4, and 5. So you can see. This strategy is something. We are only looking to cash this up one. Now let's look at this again, guys. People will sell this for you for dollars, for hundreds of dollars. They will not even teach you up to this amount, this piece. Now, first retracement. We cash this. We take some losses here. Then we move, since it retraced up again. First retracement. We cash this. I don't know, you see? you will definitely at the end of the at the end of the day, you definitely make your money. You definitely make your money. Look at this. We have this here. Crossover, first retracement, and the second one will catch the spike. That's just it. That's just it, guys. It's as simple as that. Then you can also use this strategy for catching the trend. When I mean catching the trend, these little candles here, we can also use it to catch the trend, but I'll be showing on my next video. But for now, it's just spikes. We're just catching spikes. I hope you understand this. That is how it is. Please, if you don't understand, and I can make you people, my students are using this strategy. My students are using this strategy, and they are making a lot of money from it. Daily basis. I can show you. This is a demo account for your information. It's a demo account. This is why I just placed this trade for the sake of this video on Crash 500. You can let me show you again. On Crash 500, I placed the trade using this method. As you can see, when it gets to this, after the crossover, we had the first retracement. The first retracement, and it came down back here. So definitely I'm putting my entry here. You can see I put my entry here, and no, it didn't disappoint. It didn't disappoint. That is it, guys. That is it. Look at it. I would have, it didn't disappoint. That is just it. If you make proper risk management, you will definitely make money. Don't gamble it. Don't gamble. Don't grow it. Don't think you can make millions in a day. That's where most of the forex traders make mistakes. They try to become a multi-millionaire trading forex in one day. No, we don't do that here. So guys, just do this. Hit the like button, subscribe to this channel. For more videos, I'm going to be dropping videos on cryptocurrencies, how to spot shit coins, how to make times 50x on shit coins, and how to trade spot and crypto, how to trade spot and futures on crypto, on Binance, and so how to trade the gold strategies, gold and Nasdaq. I have a lot of them, which I'm going to be giving free this year. So this is my first video tutorial for the year. Please, I'm not a financial advisor. Anytime I drop a video, please go and do your own research, and I believe you're gonna get it clearer when you do your own research and see if it works good for you. So thanks, guys. Thanks. I hope you please appreciate if you get this right. If it has helped you, it's gonna help you, and it's helping you. Please subscribe and help us. Click the like button and show appreciation to motivate us to do more videos on forex trading and crypto trading and some other benefits on financial market, which is going to be trading stocks and strategies too. So thank you, guys. Welcome to Graceville Forex, the number one spot for forex trading strategies. Thank you.